Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So today was day 2 of the bounce. And the question was, where was it going to go? Was it going to go to resistance 2, resistance 3? Was it going to not have any bounce at all today after yesterday? Well, in the morning we talked about resistance 2, resistance 3, and we tried to map it out. And you map things out so this way you know where, if you're committed, you stay longer. If you're not committed, you sell. And yesterday we went to the first area, which was a nice bounce. I think a lot of guys played it and some trailed it. And I trailed probably 4 or 5 longs. And then we got to resistance number 2, which if you go to the chart of the spiders, you will see right there. Actually, look at that. That's exactly where I drew it with Brittany this morning. You want to take a closer look just to simplify it. Sometimes you just have to really simplify it because, again, we're in complicated times and these headlines that are coming out of Greece and the Eurozone are, I think, above all of our pay grades, except for we know that they're probably not going to get saved or whatever. We'll get to that. Bottom line is, this is the little line we drew. I didn't come up with it with an algorithmic, crazy Harvard-type formula. All I showed was that here, this was 133.02. This low here was 133.13. So this zone was a resistance zone, right? And where do we go? We went as high as 133.23, so we pushed by about 10 cents. There was a small chance that people could have got excited, shorts could have got squeezed even more. We could have went to the low end of this range, which was 134.49. Talked about that also as well. This was resistance, what? Resistance 3. So resistance 1 was taking out yesterday's high. Okay, resistance 2 was right here, resistance 3 was right there. And as of now, we made it to resistance 2, and then we somewhat failed. This bar actually, I think, looks better than the actual close. Maybe Dell has it trading down after hours. So with that said, as an active trader, you take your trades. You try and figure out your time frame. Everyone has different time frames. Some people say, you know what? I think 1290 is the low. I'm going to put on some swing trades, and I'm not going to take some off at 132 and change or 133 and change. You know, I'm going to stay with it, which is fine. And some people said some stocks I'm going to stay with. Some stocks I'm just looking for a cute little long, and then I'll short into resistance. And there were guys that were shorting this up open, and they actually made money. They didn't play the long side. They said, you know what, I don't really trust the long side. It's not my game. You guys, trade from the long side. I'll get ready and I'll reshort, this bounce. Laz is really good at that, and some of the other guys are really good at that. And lo and behold, you had 2 sides of the trade. A nice long up until about 11, 12 o'clock, and then a better short. So if you look at, into it, let's put Apple as a case in point. Apple yesterday was a really good, let's take this out of the way because who knows if that's going to happen. Apple was a really nice trade once it showed you some relative strength on the 100-day. And then, yesterday gave you a nice, clean move to the upside. Took out this high and this high. So now the question is, can it hold the top third of this range? Can it hold, which it did, into the close? We now have 552.58 as a new point of reference. Can we go sideways? And if it were to break this descending trend line, maybe we get a healthier market. But as of now, it failed. Laz caught a great trade, right? He shorted into that. A lot of people did it. I think I hedged my Apple because I'm trying to do a little bit of a swing trade versus a day trade. Everyone thinks I can only know how to day trade during times like this. So I said, I'm going to put on a swing trade. I'm long from like 537. So all in all, I'm still up 20 points in the stock, but it's really hard to sit there and watch the divergence that we saw happen at what was it? I think I even tweeted. I said, if you're an active trader holding for a 2-day move, I just saw a divergence. This is your out. You have a series of lower highs. Right here, it looks as if it's going to fail. And actually, there were 2 of them. One was right here, around 568, and then right here. So the question, so if you were just trading it for a day and a half trade and you're not married to it and you're like, I don't care about it, this was your out, and this was another out. If you're trading for a swing trade, really, you go back to your daily chart, and there's no reason. Some swing traders, which they'll wait to this low here and give it all back after selling some. For me, I think I'm going to give it to like 548 because then it would negate some of this, and then I could always buy it back, and I'm just going to trade how I see it. So with that said, the reason why I'm a tiny bit skeptical is because you look at some of the other high beta names, and they look horrible today. Guys were getting me on the Twitter sphere, oh, look at your 2012 high beta stock of the year, Google. Fine. Every December, I come out with a list of stocks that I think has the potential to be a good play and a good hold. But obviously, dynamics change. Walmart was my retail stock of the year, and Google was my high beta tech stock of the year. And right now, to me, Google doesn't look so good, guys. I hate to say it, and I'm going to say it, because, okay, I'm wrong. As of right now, I am wrong that Google might not, hold this area. So if you want out of it, I think it's fine. Here is that push through. It failed. It shouldn't have happened so quick. Same way, remember here when we were trading it early in the year, this was the reason why I had it, because I thought it was going to break above this 630, and it did. And we actually made some nice money on that, and it never should have came back like that. Then it missed earnings. Then this earnings was treated poorly, another lower high. And now coming into this area, if you're not committed to Google or you're a little scared, I know active traders are going to be trying to short this thing. Okay, this thing gets below this area here. If it breaks below 596 with any kind of volume, especially below that 200-day, you're going to see guys shorting it, and why not? Next level will be 580. So at this particular point, it does not look good. You could always get back into it, and on a macro level, when stocks break that 200-day, you have to get out of the way. Look at Caterpillar. Great stock. Everyone loves it. Everyone thinks it's the best stock, the name, blah, blah, blah. When it broke its 200-day, right there, right, you could have saved yourself some pain. The 200-day was what, 96 something? Went all the way down to 85, about 10 points lower below the 200-day. So if you said, you know what, I love Caterpillar, it's a name everyone loves it fundamentally, and you ignored the high, lower high, lower high, you had to get stopped out either here or at the 200-day. So what you do is you get out of the way, you wait for a new setup, and when it reclaims the 200-day and you're in a better environment, you get back in. So if Google were to break below this 200-day and go to 580, and then we get into a bit of a better market, it comes back above, you could always get back in. If you've been long Google for 5 years and you don't want to sell it, I'm not ripping the stock out of your portfolio. We're more trend traders, and I'm just showing you my technical rules, because sometimes if you sell something, you never get back into it, and there are times when, Apple's been below its 200-day like 4 times in the last 5 years, and it's come back and made new highs. This could happen also. I'm just letting you know what I think. Amazon also, not much of a bounce here, guys. We drew this morning. Here was your bounce back up. Couldn't get above this prior pivot. So here you go. If it starts getting below this low here of 212.82, guys are going to be shorting this thing to here. So right here, this doesn't look so great either. I guess there's a small chance this holds and it could break above this, but overall, this looks like more downside action versus upside action. So both Amazon and Google look like, if we opened up tomorrow, they could be short candidates. Look at Baidu. Baidu, I think, went to almost, no, it didn't go to new lows, okay, but still in this lower pivot. And what did it do, though? It negated almost half of yesterday's bar. So to me, I'm going to avoid it, I guess, if it were to go sideways up here. The next time it gets above this area, you can get some type of trade. But right now, it's not happening. Right now, we're in more of a weaker environment than stronger environment. So anyway, we did get a trade. Chipotle, that was a little nutty. There was news out there. I think a lot of us got in a little short. And then CNBC hit it, and we're just talked about the news. And now this, too, doesn't look so hot. It looks like it's in a downtrend that's being controlled, failing over here. So we'll see, how long this stays intact. But this also is above the 100-day, so it's more on the stronger side. JP Morgan finally got a bit of a bounce. This was the lower pivot we drew today. Some guys made some money as it crossed above this high, which was 33.71. It did get as high today as 34.58. So now, if you want to create a new pattern here, let's just do this. Let's take this out of the way. Okay, take this out of the way. Take this out of the way, because we now have some new points of reference. And here is your new lower range. Remember, we tried drawing a new lower range and then it broke to the downside? This was the lower range before this engulfed that day, and then it created a new lower range. Well, now you have your first potent green bar. So now we'll see if it can go sideways within here, and you can take small trades. And at some point, if it comes up and fills this gap, see some power in the market. If all of a sudden it goes sideways and starts breaking below this, I find it hard for the market to rally. Goldman Sachs also did what Goldman Sachs does, rewarded guys who bought early in the morning, but you got to love and leave Goldman Sachs. It, for some reason, never closes strong. 97.90 was your pivot buy, went as high as 99, 95, almost $3 higher, and then closed off. So, now take this out of the way and create, just say, another kind of, I guess, pivot type area. And this is the new range to trade it in if you're just trading the range in Goldman Sachs. GLD failed today. We talked about this a few times. Last time we really talked about it was how was it going to act versus this December low? How was it going to act? Was it going to hold it? Was it going to break it? First time there, it actually held it and became a decent long right there. Gave it a nice 3-day bounce. But if this was any good, I would have thought it would have held this little pivot. It would have flagged right here and then continued higher. You know what? It didn't. It actually broke this low here of 153.86, and now it doesn't look so good. Now it still has a series of lower highs. High, lower high, lower high. This huge down day, controlling the trend. Another intermediate trend intact right there. You look right here. There you go, going across. Never broke to the upside, and now, traded lower. Couldn't even fill this gap showing power, and all this was a little bit of a bounce, a little bitty bouncy here. And now we'll see what happens, because on the monthly chart, like I've drawn in a few times, doesn't look so good. Okay, it's come a long way. It broke this, remember this wedge to the downside. Now it's trying to hold here. It breaks this. No reason why we can't be seeing 140, which is another, $12 or so to the downside, which would be another 100 and something dollars in gold. So just be careful. If you're a gold bug, you still got to follow the technical rules, otherwise you might bug out. So all in all, it's a complicated environment, so don't make it too tough on yourself. If you're playing for an easy part of the bounce, take it. If you're looking to reshort with a plan. If you're trying to maneuver stocks, both long and short, and you're not good at short, just don't do too much size. If you want to try a few new things, like being short or like playing breakdowns, and you're not good at it, listen to some guys that are pretty good at that. Laz is really good at that. He teaches it very well. His private room and his education is second to none. For me and Sparling, I make money short, but I'm more comfortable of a long, so I'd rather play the bounce, get out of the way, and try and figure it out from there. But at this point, we were 9% off the highs. Last year, I think we were 22%. The year before, 17. 1290 is the point of reference. We just had a decent bounce from what, 1290 to, where'd we go? As high as, let's see, let's go to the daily chart. We just bounced back to, what's this high? 1328. So we now see if we come in and hold a little bit higher. If not, this still, it still looks pretty damn weak. We're, below this trend. Remember this trend that we also drew way back when we broke. This is the first time IBD put us in a correction. This was the second time they put us in a correction, and now we're here. So at this particular point, take trades, stay safe, catch as a position, and let's just continue to maneuver, and we'll play the headlines, and we'll see where we go. At this point, I think there's no way Greece stays in the euro. It's going to be messy. People want to make excuses. There's no way Spain doesn't get collateral damage. We're already starting to see some of our own earnings get disrupted. I talked about Cisco 2 weeks ago when it happened, and you saw Staples, and now Dell's a little weak. Obviously, a slowdown in Europe is going to impact our earnings, especially if they're companies that have a lot of business there. So do your homework as far as that's concerned. And then as well as our own politics, you're going to see, some mudslinging as President Obama and Romney fight it out, and they're going to talk about the deficit ceiling. That's going to come up again, and they're going to fight over it, and they're going to talk about California. There's just a mess of things that are happening that aren't pretty, that are negative. So with that said, don't put your capital at risk. Let's trade the tactics intraday. We know how to trade versus pivots. We know how to use our Fibonacci retracement rules, and we know how to stay safe until we have a clearer picture. Today, we tried Facebook. It put that pivot low in at around 31, and then it gave you a nice methodical trade all the way back into that gap and then failed. I think I made decent money in it, but you didn't have to be a rocket scientist there. Obviously, they're still talking about it all day long. Now, if you look here, wow. From 43 and change all the way down to the closing on the lows. But if you do look, there was a little bit of a tradable pattern here, okay? If you break it down on the 3-minute chart, here was that first move off the lows. Okay, then I remember it had a nice little move above it. This was, I think, the first time that I bought it. So I'm buying 31.50 versus 31. It's calculated, this 50 cents. Then it had a nice wedge type pattern. I think I wrote in the, what's it called, on the Twitter sphere, I'm like above 32.20, I'm going to add. So this was my add. And then you had the gap here, right? This was 33, which was the pivot from the prior day. Traded through there, gave you a little extra juice. And then right when this happened, I think this is when I got stopped out of my remainder of my Facebook because I trailed it. You could have drawn a bit of an uptrend here too. That wound up breaking right there if you kept it tight. So this was one signal. And then right when it broke this low here, you could have got a 32.75 or 32.50, and you didn't have to sit in there all the way down to 31. You could have taken the calculated trade, level versus level, add on the wedge break, add again into the gap, and then take some off. So I think I also tweeted there, I said, you know, two nice pivots, 32.20 and then 33, take some, trail some. So use your intraday tactics to do that and create cash flow, and don't marry these things. Love them and leave them until, you know, the bed's made with more comfortable covers. Anyway, with all that said, Scott Radler, T3 Live. Today's recap. Tomorrow's another day. Stay safe, stay profitable, and listen to the action of the stocks, not of everyone, you know, all over the place as far as the analysts on TV and guys like myself. No, we actually try and help you. Anyway, with that said, have a coffee or something, you know, like, adios.